Alright, happy Wednesday, everybody. We're back here at precisealgorithmtrading.com, and let's start here with our automated trading systems. So, our results of our trading, just to clarify this, in case you don't get it. So, let's act like you do a trade and it starts at a number. You win. Let's say you win. Yeah, you just win, so the equity curve goes up. Let's say you win another one. Equity curve goes up again. Let's say you lose. Equity curve goes down. Let's say you lose another one. Equity curve goes down. Let's say you lose another one. Equity curve goes down. Then you win. Then you lose. Then you win. Then you win. Then you win or lose. Win. 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 Lose. 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 Win. 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 And that is the result that you're looking at here. So this has got nothing to do with looking at technicals like we do on the stock charts. This is the results of our trading, and the algorithm that we have built is actually, it does all that other stuff. It's got technicals that are going on under the hood. It's all in the code, and this is how it ends up. So then you add all those trades together, and this is only page 3 of 3 for what was showing on that, but it gives you the latest trades, and you can see trends, and you can see stops, and you can see where they entered, and all sorts of stuff. So today's trades on the 17th, there were 3 of them. 2 winners and a loser, nothing major. Your major ones are when you have winners like this, and that's what we're shooting for more often than not. But you know, 2 winners and a loser is not bad either. So I'll take it. This is the Russell, and this is 6 months worth of. I'm sorry, this is 9 of 22 until today. So that's over. That's more than a year's worth of data. And we're only going to just look at the tail end over here. So, and it just had one trade today down 750 bucks. And again, this is for 3 contracts. That's what this 3 means right here. And so you could divide that by 3, and that would be if you only had 1 contract. Of course, everything in this whole range would be divided by 3. And so your equity curve would look the same, except that your scale on the left hand side would be cut by a third. This is our NASDAQ futures, and you know, we were suffering through this whole drawdown, and now this thing's starting to perk up, which is great, because what we really wanted to do is do one of these, or even one of these, get us going back up again, put in new all-time highs, you know, do a little bit more scaling back and forth. And on the weekends, if you look at this thing, I open it up to the 15 months worth of data, and these bumps almost go away. So, which is crazy, but that's when you stretch out the data and you look at it, it's a really nice uptrending equity curve, which is the goal. And then today's trades, there was a bunch of them, but we had a nice big winner in the middle there. So a few losers, and like I say, I'll take that day anytime. So let's go to the regular charts, and I've got it just up on the SPX right now. I'm actually going to put it back on the ES so you can see the line that we drew. We're going to monitor this over the next few days. This has broken that line. That is technically a trend line. I mean, you could draw trend lines a number of ways, but this one's a clear one. All I did was connect that pivot at the bottom till this recent pivot and let it extend, and now we've broken that to the downside. And I used to think this didn't mean much, but I've seen enough of this over time. I mean, I'm going to say when I was younger and newer in the markets, I used to think, yeah, what's the big deal, really? But these trend lines have a habit of, they can be a big deal. This thing could wash out tomorrow because literally a lot of people see that trend line break. The big players see it and they use it to, just to take a trade down back to where it should be, which in this case is really getting back down to some areas of demand. We're looking for some demand, and where would you buy that in at? Well, possibly here, where we had this gap, or back here. Basically anywhere where price is going to get more reasonable. So this gap makes sense. 50% of this total overall move makes sense. And anyways, the other thing that can happen and happens a lot, and I could draw it on different charts, but this price can come up here right back to that line, still not take out the day before even to the upside, and then that's the kiss goodbye. We could maybe see like uh, doji type candlestick here with like a high upper wick that comes up here, touches that, comes all the way back down. This is tomorrow's price action, by the way, because this candle is trading. Tomorrow's candle starts at 6 p.m. Eastern Standard Time. You could come up here, kiss that, come back here, and just show you basically that it had some get up and go to get back up, and then that the market would sell it back down again, and it would close generally where it opened with a big upper wick, and then we could fall off from there even. So we'll see what it does. You can also, if you're a marketician or marketeer, whatever they call that, market technician like I am, you can see like on this stochastic right here that that's a higher stochastic, and then we've rolled over here at a lower level. That is a divergence. It's not really a divergence. That is just lower price, and actually the price up here is following along. You can see that this rollover is happening, and it's essentially showing you a waning um, momentum. So, which is what you. I mean, we've been waiting for this thing to unwind to the downside for a bit, and I think we're finally getting it. If we look at the Qs, that's the Nasdaq ETF, exchange traded fund. You can actually see it here, and we've got higher highs and higher lows going on the hourly chart, but then we broke that to the downside, and we're pulling back up. So um, we've got a potential change in polarity. We had higher highs and higher lows, and now we're potentially putting in lower highs or that's a lower low. We could come up to a lower high, and then this thing could just kind of go down. And a hammer candlestick right here is fun because a lot of people just see a hammer and they think that they can just act on that to the upside because of what the definition of a hammer is. And I would bet, well, I have bet, that this thing's going to go lower, and that's the kind of thing that'll suck a lot of newbie traders in. So, and then if I'm wrong, I can put my pivot up here or my stop, or I could even put it right here. It shouldn't break to the upside here even if I'm wrong, and if it does, it could be a stop hunt up here into this zone before it rolls over. But I actually think I'm going to put my stop right here just because I don't want to risk all the way up to there, and I think I'm right, so I don't really think that I need to take any more heat than that. And again, if I'm wrong, it's a plan, and it will get me out. So, all right. So today the S&P went down a half a percent, 0.56. The Dow Transports went down 94 points, and we're starting to look like we're unwinding there finally. I'm sorry, the industrials. The Russell, we'll put in IWM just because I think it's going to be the easier instrument to see, has been unwinding, and I think we're actually getting to the point where we might reverse. So back up and possibly, put in a come back up to some kind of a mean here, mean reversion before we roll over harder. Um, so we'll have to watch that. It actually had a little bit of bullishness toward the end of the day, even, but we've got a lot of unwinding to do in the rest of the markets. So, what did the transports do? The transports are doing something similar. They look like they need to probably revert to the mean here sometime soon as well. And then I actually don't want to get too short here because we did have a break in polarity back here. So we've gone from a downtrend to an uptrend by higher highs and higher lows. So you don't want to get sucked into the downside too hard here because it could get reversed in a heartbeat and go back up here and start breaking these highs. And I think based on what I'm seeing, we've got a pretty good shot at doing that. And basically, we've got some pretty good bearishness here in the first 2 weeks of the year. I think some of that's going to get unwound. And yeah, we'll see what happens. So, oil went up today. So we've been in this oil position and we've been just thrashed around. And it is what it is. We're still alive. We still got our stops in place. And we're still risking something like 1 to make 6. So, that's what that is. Let us look at gold, GLD. Okay, gold's rolled over. I don't think we're quite to where we've broken polarity yet because we had a breakout here. We've been putting in higher highs and higher lows. We put in an equal high here or thereabouts, pretty close. Now we've rolled over, and the question is going to be, are we going to break this pivot? And we're going to break this pivot, and if we do that, we'll come in and put in a new higher or lower high, and then we could actually have a series of lower highs and lower lows that come unglued here. So right now it's a little up in the air, and I don't know if putting in /GC, which is the gold futures contract, makes it any clearer. You can see here I drew in this old trend line, and you can see where it got broke, and then it came up, kissed it, and then rolled back over again. This is what I'm talking about in the overall markets. It's ridiculous that these, well, I shouldn't say ridiculous. It's just interesting how these lines matter. And you can literally see they come up through it a little bit. Maybe I don't have it drawn perfectly, but then it just, it messed around there for a while and it could never get back really and close back above it. And now we're coming off of it. I just think it's wild how that type of thing works with this many players in the market, that it just works out like that a lot. That is gold. Let's look at silver. Yeah, it looks like my silver position is going to get stopped out. And I tell you what, if it does, I don't think I want to get too excited about shorting or buying puts on silver because it's only a $20 position. But I still may, because that's a head and shoulders pattern, and I think the target's going to be down around under 19. It's a very potential head and shoulders pattern. I think that, yeah, target's going to be somewhere down here. I don't know about under 19, but yeah, probably under 19. That's a good risk reward trade. So, all right, moving on. Stockcharts.com, and let's look at the bullish percent indexes or indices. So here's INDU, the industrials. They did not move today. The NYSE rolled over today. There you go. We were kind of calling for that. Said it didn't have very much further to go. Now we just see how hard and fast this thing falls. I'm not expecting it to fall very hard or very fast because I'm expecting a bounce back here any time, and possibly a continuation to the upside, like I spelled out there. The transports didn't move today. The Nasdaq down 1.9%, and we're really close to a rollover on that one. Under 54 is going to get it done, and we're at 54.75, so I'm going to say that's about a lock. As soon as it rolls over, I think a lot of people who trade off of these point and figure charts, it's a time when, as soon as they roll over, I think the market will shove it back up the other way, put those people underwater, because that's just generally what the markets do. So here we have the two more O's on the SPX to the downside. So next time it rolls up, I think we're going to have a pretty good shot at some good bullish trades. The OEX tacked on a new O, minus 4%. And the NDX tacked on a new O. So that is my report for tonight. Have a great tomorrow and take care.